Hey everyone, and welcome back to the channel. In this clip, Jesse Myers talks to host Preston Pysh about MicroStrategy's Bitcoin-driven financial strategy, highlighting its $42.5 billion Bitcoin Treasury and Perpetual Strife plan to siphon $300 trillion from bonds. They explore Bitcoin's absolute scarcity, its potential $13 million price by 2045, and its rise as the ultimate store of value in a $900 trillion global asset landscape.
Something else that I think is important just for context is looking at the balance sheet itself, because we've been talking a lot about the income statement and that $25 million gap and things like that. When you look at the size of that relative to the equity sitting on the balance sheet, I think it's a really important highlight to talk about the health of the balance sheet and what he can do based on Bitcoin's current value. And I think that that's an important highlight. Today, just for context, the company has about $44.2 billion in assets, and it has about $10.7 billion in liabilities.
The balance sheet's sheer scale sets the stage. MicroStrategy's $44.2 billion assets with $42.5 billion in Bitcoin dwarf $10.7 billion in liabilities. That $400 million figure is just 1% of Bitcoin holdings, showing a financial fortress built to dominate. This massive treasury fuels aggressive Bitcoin accumulation without needing to sell. It positions MicroStrategy to challenge traditional assets like bonds. Strategic flexibility here is a game changer for corporate finance.
And the balance sheet, the assets, 42.5 of that 44 is the value of the Bitcoin sitting on the balance sheet. So you have an enormous amount of, just to put this in comparison, $400 million is 1% of the Bitcoin sitting on his balance sheet, just to kind of put that in context, how big these numbers are.
Yeah.
$400 million is 1% of the balance sheet. And so when we talk about a $25 million delta on his income statement, can that be made up with the Bitcoin if he wants? Absolutely, it could be. Does it mean he's going to have to sell? I don't think it is going to have to mean he has to sell, because he can just kind of roll, the common stock as cash to offset that difference.
MicroStrategy's financial agility comes into focus. The $25 million income gap is negligible against $42.5 billion in Bitcoin assets. Issuing stock, not selling, Bitcoin covers this gap effortlessly, preserving the Treasury's core. This approach lets MicroStrategy ride Bitcoin's market gains to plug operational holes. It's a calculated move that avoids liquidating valuable assets. The strategy underscores a commitment to scaling Bitcoin holdings long term.
And that's where the name Perpetual Strife, I think, comes in, because that stuck out to me. So when they announced this latest preferred stock offering, they called it Strife. And they named the prior one Strike because it had an embedded call option, and that's got a strike price. And so that's a relevant term. But Strife is not a term in finance. Perpetual Strife is certainly not a term in finance. So it's a play on words, and there's a big wink significance in there of, it's an adjacent word to strife. It's cute. But I think what he's really getting at, they're calling it Perpetual Strife, and that is a nod to the speculative attack that we talk about in Bitcoin.
The Perpetual Strife name carries clever intent. It signals a Bitcoin-led assault on the $300 trillion bond market, with Strike's 11.8% yield as the bait. Bitcoin emerges as the superior asset in a war for value storage. This subtle branding masks a bold strategy to disrupt fixed income. MicroStrategy aims to siphon capital by offering returns bonds can't match. It's a calculated play to reshape investor priorities.
He has talked previously about, with that $900 trillion global asset landscape chart, he has said that we are in a constant, continuous war between asset classes, and, value flows to whichever asset classes make the most sense at any given time. And that's what Perpetual Strife is hitting on here, that this is a speculative attack on bonds to convert a huge portion of that capital, the $300 trillion sitting there, into Bitcoin because it is a more attractive asset at this point in time.
So I typed in Perpetual Strife into Google, and it immediately was autofilling Perpetual Strife in the Bible. When I click on this, it says in the Bible, perpetual strife refers to ongoing, intense conflict and discord, often stemming from bitterness, anger, and lack of love and unity.
Yeah, that's quite a wink, wink.
A biblical nod in Perpetual Strife reveals deeper motives. Bonds, losing to 8% inflation, are a poor bet compared to Bitcoin's potential. The strategy quietly dismisses fixed income's relevance, redirecting $300 trillion to Bitcoin's higher returns. Public diplomacy aside, the approach suggests contempt for bonds' diminishing value. MicroStrategy's strike stock lures investors away from traditional safe havens. This shift highlights Bitcoin's edge in an inflationary era.
Saylor's very good about he's made the point of the Bitcoin and the dollar can coexist, and he doesn't think that Bitcoin is a threat to the dollar. You can sort of read between the lines there about how much does he genuinely believe that versus how much is that good politics. And you can make it a case either way. But, with this, I think that if you were having a few drinks with Saylor in a private place and you asked him, what do you think about holding bonds? I think he would say that people holding bonds are setting their money on fire. Yeah. And that you'd be much better off holding Bitcoin. And that's what he is helping people do now. That's what he's designed strategy to do. He is creating a better home for capital than the $300 trillion in the bond market currently have. He probably has a certain amount of contempt for bonds in general, given his expectation about inflation. U.S. Treasuries are paying 4.2%. The 10-year U.S. Treasury is a 4.2% yield right now, but he's expecting 8% real inflation. So you're losing 4% in real terms every year that you hold U.S. Treasuries.
Yeah.
And so, I think that Perpetual Strife is about as direct of a battle cry as you're going to get from Saylor.
Yeah, and I think this is another interesting way to look at it too. So let's say he wants to raise another $500 million by issuing more common stock or issuing more on this preferred, the first one, the strike.
The yield comparison exposes bonds' weakness. At 4.2%, Treasury yields erode against 8% inflation, while Strike's 11.8% yield delivers real gains. Perpetual Strife draws bond investors to Bitcoin's superior returns, with MicroStrategy as the conduit. This strategy targets the $300 trillion bond market's capital, offering a lifeline to those stuck in losing assets. It's a direct challenge to fixed income's fading relevance. Bitcoin's growth potential takes center stage.
So he takes the stock to market, whether it's preferred or common. He raises the $500 million of cash. He goes and buys Bitcoin. In the one, just going to the straight common stock, the dilution of that stock is realized immediately, right? In the other one, the value of that stock, which has no impact on the common stock, which is where, I would imagine the majority of his interest is in the common stock, right? But it does have this lag of diluting the common stock assuming that's what he's choosing to pay it in, which I would assume that's what he is going to pay it in because of the lack of earnings power on a relative basis. So he's diluting the common stock by 10% on an annualized basis, right? So instead of diluting all of that 500 million worth right then and now, he's doing that through 10% increments on an annualized basis to get to the same dilution factor that you would have. And I think that is a really important way of how to look at this and looking at which one is he going to tap, which one is he going to raise the cash from. So let's play this out again. Let's say Bitcoin's roaring. Let's say we're at $200,000 a Bitcoin. And now instead of having $44 billion for assets, he has close to, $80 or $90 billion of assets on the books, and the stock price hasn't doubled, it's quadrupled. This might be a scenario where it makes more sense to tap the common stock and the preferred stock, because maybe the preferred stock hasn't moved as much because it trades a lot more like fixed income with respect to the price premium that's put on it. So these are all the choices. These are all the things that he has at his disposal to really kind of tap into, to just continue to take these financial tools and transmute the cash that he can generate from stock certificates and turn it into more Bitcoin on the balance sheet.
A $200,000 Bitcoin price unlocks massive potential. MicroStrategy's $90 billion asset base could quadruple stock value, amplifying buying power. Strategic stock issuances limit dilution, channeling market enthusiasm into more Bitcoin. This financial engineering scales the Treasury at breakneck speed, outpacing traditional finance. It's a blueprint for leveraging Bitcoin's gains to dominate. The balance sheet becomes a weapon for exponential growth.
I think it's fascinating. Like,
oh, it's so interesting. It's genius financial engineering.
Yeah.
And I think it's the biggest story in finance.
Yeah.
And we're going to look back on this as the defining, genius move of this era in public companies anywhere.
Let's take this scenario too, Jesse. If, let's say, Bitcoin's at 200,000 and everything that I just described as far as like how strong the balance sheet is, because remember, it's not like his liabilities have gone up that much. They've gone up a little bit depending on which one of these mechanisms he's tapping. But you go from a 4-to-1 assets to liability to probably a 6-to-1 under that scenario, or a 7-to-1 under that scenario that we just described. And he's not buying $500 million of Bitcoin in each one of those monthly deals. He's now going out and buying 1.5 billion or 2 billion in each one of the, like the sizing is 4 times more powerful. What does that do as the Bitcoin's getting more and more scarce? So, and we haven't even mentioned, nation states leaning into just one company.
Yeah. Saylor fully expects to source and deploy $3 trillion of capital into Bitcoin. And currently Bitcoin is only $2 trillion total. So there's $3 trillion of buying pressure from strategy alone.
Yeah.
Bitcoin's only $2 trillion. And his model expects that one Bitcoin will be worth $13 million in 20 years.
Jesse, this is where I think we need to go. So somebody who's listening to this that is flirting with the idea of Bitcoin, hasn't been orange pilled, but they're just like, they're hearing all this and they're just like, what am I listening to right now? Okay. That person, if they were sitting here with us right now, this is the question that person would have. They said, this is all based on you just believing that Bitcoin's going to go higher. What if it goes down 75%? Like, none of this is guaranteed that Bitcoin's just going to keep going up. So how do you respond to that person that's thinking that right now as they're listening to us?
Skepticism about Bitcoin's price deserves a response. A 75% crash is possible, but its digital scarcity, 21 million coins, zero dilution, anchors its value. This once-in-a-species asset outlasts market volatility, built for long-term wealth preservation. Short-term dips are buying opportunities for those eyeing its future dominance. Unlike any other asset, Bitcoin's finite supply drives its enduring appeal. Volatility is just noise in its ascent.
Yeah, we sound crazy on the surface, and that's just how it is. But when you dig into it and you run the numbers, well, it starts to come out to this sort of picture of the future. And I think that the most important thing to keep in mind for somebody new to Bitcoin is it's a once-in-a-species invention of digital scarcity, a perfection of scarcity. It's the invention of absolute scarcity. And by that, I mean, we've never had an asset ever that has an absolutely finite supply. It's just not possible in the physical world. It is possible if you create that system in the digital world. And Bitcoin is it. And of course, we have a bunch of copies of that system, but you can create a bunch more copies, and each incremental copy of the original instance of digital scarcity is itself not scarce. So the only thing that is scarce here is Bitcoin, and it's absolutely scarce. And the entire story of human history is people searching for the best store of value asset to propagate their value today into the future for future use. And what has historically won is assets that have very low supply dilution every year. In terms of monies, that has meant gold, real estate. It's hard to make more real estate, so that's become a savings vehicle for people. They store a lot of value in real estate. And here is this digital perfection of these properties that humans have been seeking forever. And it's tiny still because it's only 16 years old. But if you're thinking about, where can you store value safely for use in the future, and there's only one asset that has zero supply dilution after we get to 21 million Bitcoin, value is going to osmotically flow towards that optimum solution of value transmission through time. And then the question is, how much value is looking for a store of value asset? There's $900 trillion of value out there. Saylor has kind of put a stake in the ground and said half of that is just looking for a store of value. $450 trillion is your total addressable market, what's possible for the store of value category. And then here's one asset that has a finite supply ever in human history. And it's going to keep siphoning away store of value capital from other asset buckets to this, as Trace Mayer used to say, infinitely expandable blueberry. So there's a tiny little blueberry in the global asset landscape, but you can hook up a water main to it and it can expand in terms of its total value. And we're in the early stages of that. So
the expandable blueberry analogy paints a vivid picture. Bitcoin's $2 trillion market cap is tiny in a $900 trillion asset world, but its absolute scarcity fuels explosive growth. It siphons $450 trillion from bonds and real estate, claiming the throne as the ultimate digital savings vehicle. This vision clarifies Bitcoin's potential to dominate wealth storage. Its finite supply draws value relentlessly. The future looks boundless.
It sounds crazy that we're talking about $13 million per Bitcoin in 20 years, but that amounts to 7% of the world's assets in Saylor's version of how things play out. So 7% of the world's assets in 20 years, basically the second wave of the internet revolution. We've digitized information with the internet, and now we're digitizing value with Bitcoin. And how much value is out there? Half the world's value. And Bitcoin in the next 20 years is, Saylor expects, going to take 7% of that 100%. So, a chunk of the 50. And that'll be where Bitcoin is 20 years from now. And it won't be done at that point either. We won't have reached the full potential of what Bitcoin can become, because it can take the majority of that 450 trillion, the majority of that half of the world's assets that's just looking for the best store of value out there. So, that's a little context of how I see it. And I'm pretty sure that's how Saylor sees it as well when he's thinking about what Bitcoin is and what it's on track to become.
This was a fascinating discussion filled with golden nuggets. But the three main lessons from this conversation are: 1. MicroStrategy's Bitcoin Treasury fuels financial flexibility. A $44.2 billion balance sheet with $42.5 billion in Bitcoin renders a $25 million income gap negligible. Stock issuances cover operational needs without selling Bitcoin, preserving the treasury. This financial agility allows MicroStrategy to scale its Bitcoin holdings, leveraging market gains to redefine corporate finance with a robust asset-backed strategy. 2. Perpetual Strife targets the bond market's capital. The Perpetual Strife strategy uses Strike's 11.8% yield to siphon $300 trillion from bonds, which lose to 8% inflation at 4.2% yields. This bold attack redirects capital to Bitcoin's superior returns, positioning MicroStrategy as a conduit for bond investors seeking real gains in an inflationary environment. 3. Bitcoin's absolute scarcity drives long-term value. Bitcoin's 21 million coin cap with zero dilution post-2033 makes it a unique digital asset. Outshining gold or real estate, it's poised to capture $450 trillion from global assets as the perfect store of value. A projected $13 million price by 2045 reflects its unmatched potential to preserve wealth. So, what do you think about this Bitcoin conversation? Let us know in the comments section below. If you enjoy this type of content and want to see more, make sure to give this video a like and subscribe to our channel. Until next time, keep learning and keep stacking.